Hey guys, so now that we've spent a lot of time really giving you the basic understandings to the financial concepts that underlie the different financial statements, we're going to spend some time here outlining how do we take what we just said about, our statement of cash flow, or about free cash flow, and how do we change that into the statement of cash flows, right? We're going to take that same principle of starting with net income, making adjustments to it, and then ending up at the bottom with the firm's cash flow. What's the difference between the free cash flow and the statement of cash flows? Essentially, the difference here is right here we're finding the actual cash flow as opposed to just, perhaps an estimated cash flow. And so what we're going to do now is we're going to divide up the statement of cash flows into three categories just so that it's easier for us to understand. And companies do this too as part of their GAAP earnings that they report on their 10Ks and 10Qs. Right? So what we're going to do right here is we're going to divide our statement of cash flows. And right here, starting with net income, ending with the new cash balance at the bottom, this is our statement of cash flows here. So we're going to add, right here, we're going to add cash from operation. And that's going to be one category. Now, what category is cash flow from operations? Cash flow from operations is the category of what we were discussing when we were talking about free cash flow for the most part. Everything we were talking about when we calculated free cash flow, except CapEx. For example, you start with net income. You still want to add back your depreciation and amortization. What else do you want to do? You also want to subtract the change in net working capital. How do you calculate the change in net working capital? We're going to talk about that next episode when we talk about the balance sheet accounts. But basically, cash from operations is anything that has to do with the day-to-day operating of the firm, or not even the day-to-day, but the short-term operating of the firm that affects the cash balance, but was not included in the income statement, either because it's not tax deductible, likely because it's not tax deductible, right? Any of those things are included here in cash from operations, okay? And then after cash from operations, we have... Actually, I'll give you just a little insight right here, so we don't have to do this in our next episode, but a little insight here on what change in net working capital actually is. Basically, every account that you have on the balance sheet, so now we're getting into our balance sheet a little bit, but every account that you have on the balance sheet, whether it's accounts receivable, accounts payable, taxes payable, cash, stuff like that, every account you have on the balance sheet either adds or decreases to cash, right? And all of those together form what's called net working capital. So I'm not going to get into the very details of this because usually companies will just leave a line item as net working capital, which is all you really need to know for now. But basically what they're doing is they're taking into account all the accounts receivable, the accounts payable, all of their inventory accounts, all of that stuff, and they're turning it into one number, which basically says, how does that all affect our cash? And that is their net working capital requirement, which is basically how much money they need to operate the firm on a short-term basis. Okay, so that's net working capital. Now, there are two other categories that we're going to have here on our statement of cash flows. We're going to have the cash from investing, and we're also going to have cash from financing. And these are two sides of the same coin. Cash from investing is anything that has to do with the firm investing its own capital elsewhere. I'll give you an example. If a firm buys capital, spends money on capital expenditures, right? You would add back CapEx right here because that's an investment the firm is making. If the firm has money coming in from minority interests, then for some reason that's not on the income statement, then you would have minority interests show up on cash from investing. If the firm has investments in treasury bonds, so you could have bonds, you could have equities, that's a Q. You could have any other number of things. Anytime the firm is investing its own money, it goes into cash from investing. Okay? Now, what about cash from financing? Cash from financing is anything that has to do with the firm funding itself, or, in other words, others investing in the firm. So what goes in cash from financing? In cash from financing, you get if they issue stock, if they issue bonds, right? If they buy bonds from another company, it's cash for investing. If they issue bonds of their own, that goes in financing. If they issue, instead of buying equity of other companies, if they issue equity of their own company, so if they issue stock, that goes into cash from financing, because it's how they're financing the company. You could put notes payable. My handwriting is awful here, but you could put notes, that's supposed to be an N. You could put notes payable in here. Really, anything that has to do with the firm financing itself. And so really all you're going to do, and the reason I'm not going specific into a long video like some people might have here, is because when each company is so unique and so different that no two statement of cash flows are going to look exactly the same. And even if they look relatively the same, everyone's going to have their own unique line items. And so what we're going to need to do is you're going to need to look up, and because this is a shorter video, I'm asking you guys to do this. Pick your favorite company or the company you follow most in the stock market. Look up their most recent 10Q or 10K. Look at their statement of cash flows and connect it to this outline we have here. And again, this outline basically says this. You start at the top with net income. You make the adjustments to net income that we spoke about by adding non-cash expenses such as depreciation and amortization. Then you're going to subtract your change in net working capital, as we discussed in the last video. And then you're going to adjust for cash from investing. So if they paid money for an investment, you subtract it. If an investment paid them money, you're going to add it. And likewise for cash from financing. If they received cash because they issued stock, you're going to add it. If it's a share buyback, right, then you're going to take away stock. Or you're going to take away cash. So you're going to go through, here's your homework assignment. You are going through one 10Q or one 10K from any of your favorite publicly traded companies. Look up their statement of cash flows and see if you can categorize in each line item. It might tell it for you, but see if you can understand why each line item is in cash from operating or cash from operation or cash from investing or cash from financing. Because once you do that, even just with one company, you're going to have a much better understanding of how a statement of cash flows is supposed to look and what's going on when you guys are looking at your own pitch. And I would have just brought one and showed it on the screen here for you and actually walked you guys through it. But I feel like as we're getting towards building your actual pitches, you guys should start looking up 10Qs and 10Ks on your own just to get the learning experience. And again, if any of you would like me to go through personally one-on-one with you a statement of cash flows in depth, I'm more than happy to do so, on the condition that first, you at least try to look it up on your own right here. And if you send me a text, say, Kenny, look, I'm trying to go through it on my own, I don't understand it, that's totally cool. Just send me an email or send me a text or whatever. Email, wow, how old am I? But send me a text and I'll walk you through it. But I want you to try looking at a 10Q or 10K. For those of you who don't know, those are annual. The 10K is annual. The 10Q is a quarterly report filed by public companies. And try to understand each line item on the income statement and why it goes in each of these three sections. And then at the end, you're going to end off with your ending cash balance. Now, just your last point to really round this lesson out and to give you one more nugget that you probably didn't already know, or you might have already knew. But what's unique about the statement of cash flows? If you look here, everything on the statement of cash flows is drawn from either the income statement or the balance sheet. So what are you really doing here? The truth is, as long as you have at least two income statements, as long as you have, the income statement for the period, and at least two balance sheets, the before and after, the statement of cash flows doesn't tell you anything new. All it does is it displays the same information in a way that's practically much more useful to management. For example, right, seeing a balance sheet is great, but it doesn't tell you how much cash you have on hand to pay off those liabilities that the balance sheet shows. The statement of cash flow shows exactly how that's all moving. And so you might be smart and say, look, the statement of cash flows isn't giving us any new information, but what it's doing is it's presenting the information which we already have in a way that's much more helpful towards management to really understand and get a grasp of, okay, I see the company's balance sheet, I see our assets and our liabilities, what we own and what we owe, but how do we manage all of that? How do we know that we're really, in a good position here? And the statement of cash flows really helps reframe things in a way that really helps practically with the management of a company. So if you're interested in management, or even if you're interested in just investing, which I assume you are from being in the fund, right? It would be very naive to say the statement of cash flows doesn't add any information, because the perspective you get from the statement of cash flows you can't really get just by looking at, a balance sheet and an income statement. So I would really advise looking at a 10Q and 10K, one or the other of your favorite publicly traded company. Look at how it's all going and see if you can go through and categorize why each of these things is in each of their categories, and then I think you'll have a really great understanding, given this and the previous video, on the statement of cash flows. And so that'll round it up for now with a little bit of a quicker video, and I'll see you guys next week.